Hi everyone, and welcome in to today's market update and economic calendar for today, the 8th of December. 8th of December 2020. It's great to have your company for today. My name is Paul Botchell. I'm here to have a bit of a look at the economic calendar and the markets for you. Let's get straight into it. Economic calendar, we've had a look at that already a little bit this week. Let's see what's coming today. That is not what I'm looking for. Sorry guys, just getting the charts. We'll come back to that in a little while. I'm not quite sure why I've got that and not my normal economic calendar. Let's have a look. Let's through some charts for today. Look, today's a very quiet news day, by the way. We can have a look at that in a second. So FTSE leads us away as always today, and FTSE leads us away as always today, and here we are on the FTSE. Still having a few issues with the old Zoom thing, but it looks like we're all good as we should be now. And look, continuation really for the FTSE. We've seen this this move up come into this box, and now this move up again, and a small and a bit of a retracement yesterday. Still really when this selling bar, it's still got a higher high and a higher low than yesterday, so it doesn't look particularly bearish to me. Wood metals price, see price come back down and retest. There's this level here, the horizontal level plus the weekly pivot. Looks like an obvious target for retest before any grind further up. So I'd be looking for potentially a little test of this area here, and then perhaps move back up to the resistance, the next horizontal level up here around 6,644. Again, I think it's always the same with this kind of stuff. If I'm looking for the move short down to here, where am I wrong? Well, I'm wrong if we take out the high of tomorrow, in which case we can just take a little move up to the resistance from there. Nasdaq, look again, the sort of slow grind up that's the US stock market at the moment continues. Previous highs gone, stopped at a little bit of a hesitation, little breakthrough, bit more of a break, so much body on this, bit of a gap up and ends on top of the gap. Kind of a weird day yesterday that, and again today just looks like a potentially if it's just a slight gap up already, and just looks like we might have another sort of grind day up, slow bull day. I did touch on the yesterday that my suggestion was that the choices for the US stock market at the moment, where we get into the slow grind up and we risk the big drop down, and that's the market as it stands right now for mine. Again, S&P, look, forming quite a nice channel here, and looking pretty aggressive. Little pop up and then a nice channel like this. I would expect at some stage for this to consolidate and start flattening out. This kind of channel often will take you in a direction and then consolidate. Nothing in the price action suggests anything too major. Similar type story to the Nasdaq really here. Potential after the down day yesterday just to see a little pull back down to support here, and then another move up, or to break the top of this bar and just continue to grind up. Either one is an option for us. We need to be sort of aware of either. For now, I'll be looking for the move below and the little pop back down to here, and then the move up and see if we can buy it at a better price. It requires some patience, this kind of stuff, but I'm in no hurry. Nothing else to do. Look, Bitcoin, we're still sitting well inside the range of this bar here, and we haven't had a real sort of close outside the range of this yet. Yesterday an inside bar, following a reasonably small bar, following quite a small bar, followed by a bar where nothing happened. And, again, I think that nothing's really changed for us here on Bitcoin. Bitcoin's in wait and see mode. And look, again, for mine, the likely of us testing 20,000, I think is very much there. I think I test the top's very likely. You can't rule out a run down first. We can either do a trace to here or to here as targets before we go up. I think it's likely we will go up before that, to be honest. But again, for now, really it's a bit of wait and see mode. I think really to trade, you just need to let this break out and give us a direction, and then we'll follow along. Trying to guess the direction on these things is pretty difficult. Now, there's quite a lot of talk around town about the correlation between Bitcoin and gold. It's a correlation that does interest me. Let me just move this over here. Boy, another big day up on gold yesterday. Some traders around our team are pretty damn happy with that. 1864, and look, I'd have thought that, again, we've seen, 1, 2, 3 big days up hesitation. We talked this yesterday that it was likely we would get this hesitation around monthly pivot. So we blew past the 100, we blew past weekly pivot, we blew past monthly pivot. We hesitated here and we took at the top of this bar, then the step up will be quite aggressive. It has got straight to weekly resistance 1, so it's very technical at the moment. We love that when gold does this. Very technical. Now there was a little bit of a level where we are, just to drop it on here. Look, just sort of recent, highs and lows. You could sort of say it's around there. There's a bit in here, this area through here as well, and which is about where we are right now. I don't expect this sort of thing now. Now we're testing this again. We've had a little look at it, come back, testing it again. A bit of a breakthrough. If we get up above WR1 on a 480 chart, I would think that WR2 and this horizontal level will be coming into play about 1980, 97. So the target for gold on the upside really now is to get around 1900. I like the combined play. The suggestion is that if Bitcoin rallies, gold will sell, and I think that's possible. I don't think there's enough people who trade them both. That's really the case, but it's certainly doing the rounds at the moment that if Bitcoin rallies, gold will sell. You can see if you go back here, 5 days, that the rally, the move down on gold came from about the 9th. That while Bitcoin was rallying, gold was selling. And I think it was the 9th, wasn't it? So, there's some evidence for that in the price action, but I think it's unlikely that's a massive correlation. I think that's far more likely that's just a coincidence. I think there's some correlation likely, and I think it's possible to take advantage of that. One of the things we could do is look to buy one and perhaps buy Bitcoin, sell gold as a bit of a hedge, but I think we'll also be able to buy them both. It's unlikely they both crash, I would have thought. XTI, look, gold, this is WTI, West Texas inventory, for people on looking to understand the ticker. We've seen this long range in oil, bit of a breakout, took on the top, smashed through it, retested it, pushed off again, checked out the top, pulled back off it again. And if anything right now, I'd suggest to you that oil looks like it might be starting to try and set up a new range. And look, that wouldn't surprise me. Trading down from here to here looks a possibility for mine. I'd suggest to you that we might just pull it up to there for the new range. I think what's happening with oil is that everyone's going well. All this stuff's going on now, but a year from now it'll be okay. So the forward-based, or what they call the backdated futures contracts, are quite highly priced for this. And everyone's going, well, if there's some tough times, we'll just sit through it. We'll be okay. Long-term, it's going to be strong. And I think long-term it is going to be strong, but it means it's not really pricing like a lot of stuff, like the stock markets. It's just not pricing in bad news. It's saying when price news is short, bad news is short-term, and good news is long-term. We're going to have long-term positions and hold. Interesting time in the stock market, and all of this stuff is a bit of a different type of approach. One I suggest to you that, like all things in the market, the more people do that kind of thing, the more it's going to fall to pieces at some stage. The more everyone does the same thing, the less it's likely to work. And there's some real risk with this. There's no short-term. I'll tell you what, you get one of those vaccines fail, we might see a pretty interesting move, because some people pretty loaded up on the belief that long-term things are going to be okay. They might go, oh, maybe midterm it's not. I'm not saying that's going to happen. I'm just saying that because people are loading on one side of the position, if that doesn't work out, you get a big swing to the other side and big market moves. So that interests me a little bit at the moment. And I still think our options, a lot of these things are just the grind up, and we're risking the steep fall. And I think we're risking steep falls if something does come up. So at the moment, the market continues to price in good news and not bad news. And we'll see how that works out over time. Look, I'd say sometimes that'll work out great, and sometimes it'll be a disaster. And we'll see how that does go on this particular occasion. Euro having blasted out through here, just hesitating. A little down day. Hasn't gone anywhere. That really, these 2 days it really has gone almost nowhere. It's just a couple of little red bars. Look, we're hearing the next target for euro really 124.83 around the 125 mark is a target for euro. I'd suggest you could have a look at these highs. And look, the big thing is US dollar printing. will cause inflation and devaluation of the US dollar, and it'll show versus the euro. Now, the question is whether the European Union will allow that to happen. The European Union probably doesn't want the euro at 125 versus US dollar at the moment. It's not great for stimulating the economy. High dollar gives you more, or high euro gives them more purchasing power offshore, which means that they're going to import more things because they can get more value for their money, and that's going to create jobs somewhere else. What governments are trying to do, which is what the US is doing at the moment, is get a lower dollar so that things from overseas are more expensive, so that people will buy locally and create more jobs in your economy. That's kind of the battle the central banks are all in. Now, while there's a lot of talk about the collapse of the US dollar, it's hard to know what it's going to collapse against when every other country wants to devalue its currency as well. So 125, maybe the 135 handle people are talking about. There's a lot to go under the water before we get there. And dollar yen, which continues to sit inside a triangle again. Let's come back and have a look at this bar here. Let's run the roost for a while, and as long as we're inside the range of that, I think we really are, regardless of the triangle. I think we're stuck and fit. I might even just take the triangle off, and be more concerned about the range from here. And I might color that a little bit later on, just to make it a bit clear for everybody. Look, guys, have a look at the Aussie. Risk on is the game, but still the Aussie. After this lovely again, really nice channels, these channels, lovely channel heading up. And what we tend to see, this is one of the big old Brooks things, acceleration channel, then we'd expect it to consolidate and then potentially channel again. Top end target on the Aussie play 80. It's been a while since it's been at that kind of level. So early 2018 since we've been at sort of 80, and sometime before since we've been at 2014 since we've been above that. Interesting to see what the Aussie does, but look, with their really tough stand on China, there's always a bit of a handback on the currency at the moment. It's causing them some damage, and we'll wait and see. For mine, if we come back to the monthly chart, it's quite interesting. We are around some recent monthly highs, around a bit of support and resistance. Looks like quite a key area for mine. Back on the daily chart, I'll just bring some data in on it. I'd suggest you that looks like the next big, 75 looks like the next big upside target. So we'll keep an eye on the run up to that and see how we go from there. Let's go back to the daily chart now. Still a while to go to get there. I think overall at the moment you need to be bullish on the Aussie. But what we're looking for really is a better pullback than that, perhaps a pullback down to this level. That's a bit more small bar. Let's pull back into here and give us a reversal bar and give us that move up there. It'll be a nice solid move in the Aussie if it turns up. Look, everybody, let's get see if we can have a look at the economic calendar. We didn't catch at the start. Sorry about that. Does seem to be a few technical issues with this show at the moment. We'll do some work on trying to tidy it up. Let's do a share. There we go. And the next major news is the Canadian Bank of Canada rate statement, overnight rate. Tuesday, no news. All day, Canadian Bank of Canada rate is the big news on Wednesday. And Thursday, we've got the Euro currency stuff for the main financing rate. Monetary policy statement, ECB press conference. This will be the biggest big one, 9:30 p.m. Thursday, Singapore. We'll see the ECB press conference. That'll have a bit of a bearing in the market as the ECB comes out, having seen a rather large roll up in its currency and see whether it wants to do about that. We'll get some idea from the wording of the press conference, I would imagine. Thanks for joining me today, guys. It's great to have your company. Do take care, and we'll see you tomorrow, same time. Cheers, everybody.